Good morning. Going to have some fun today? We're going to talk about life insurance all day. Your enthusiasm is underwhelming. And tomorrow, Jerry Reinhardt's going to talk about health insurance, long-term care, and disability income. Some pretty important stuff. One of my favorite words is stuff. That's what I tell my wife. I'm going to go out in the garage and clean up my stuff. I'm going to go in my office and clean up my desk. Why? Because it's full of stuff. I'm sure you have a familiar word that you use from time to time. But before we start, let me take a little survey. How many of you, are any of you actively, and I mean actively involved in the sale or service of life insurance? And I don't mean once or twice a year, I mean at least weekly or monthly. Hands. 1, 2, 3, 4. 4 out of 50 some. Does this surprise anyone? It shouldn't. The National Alliance is primarily a property and casualty organization. Would you agree? Yeah. But we have a life and health component, and I spent 6.5 years working directly for the National Alliance as a life and health academic director. I spent 36 years in sales, production, management, consulting with various insurance companies in property and casualty and life insurance. I spent 9.5 years with MetLife, who sells primarily life insurance, a little bit of property and casualty. And I retired from production in 2008 and went to work for the National Alliance as the Life and Health Academic Director and retired from that organization in 2014. Well, what are you doing here? Because the day I retired, I signed an independent contractors agreement to be a faculty member, to continue to be a faculty member in CIC Life and Health, in some personal lines and CISR classes, and primarily ed consulting around the country for a couple of reasons. Number one, I love doing it. It keeps me active in the industry. And the most important reason is it gets me out of the house, which makes my wife very happy. She's still fully, gainfully employed. She's a little bit younger than I am. She's an HR director for a mortgage company in Austin, which is where we live. We live in Cedar Park, a suburb of Austin. And she's an HR director for a mortgage company. Now, just imagine for a moment the fascinating dinner conversations on Sunday evenings before we're prepping for the next week between an insurance agent and an HR director. So, honey, how many people are you going to fire this week? Or better yet, how many are you going to hire? So we have some fascinating conversations. So with that survey, 4 of you are actively involved in the business. The rest of you are not. Now, does anybody in here honestly want to say that after sitting here for 2 days, I think I'll become active in the life and health insurance business? I see a bunch of heads going, why not? Why not? Huh? It's not my end. It's not for me. Well, that's okay. Now, I think your customers might like to think that you're a little more well-rounded, but that's entirely up to you. I will give you one caveat about your careers in the insurance business, if you will. If you have a life and health license and you're not having the conversation with your customers about any of these products, you're setting yourself up for an E&O. If you don't have a license, you're probably off the hook. But since most of you have already described that you're probably not going to become actively involved in the business for your customers, are you all consumers? Yes, you are. And every time I do one of these institutes in the life and health arena, I ask, When you walk out of here on Thursday evening or Friday morning when you're finished with the exam, will you know more, and will you begin to think, maybe I should do something for myself in regards to these products? Should I think about more life insurance? Should my spouse think about more life insurance? Should I think about life insurance on my kids, on my grandkids, on my business partner? We're going to talk about all those things. And the phrase that I have begun to use is, when you walk out of here at the end of the Institute, will you have drank the Kool-Aid? Now, some of you know to which I refer when I say drank the Kool-Aid. Some of you are thinking, what is he talking about? I won't elaborate on that. If you know it, if you know what the story about drinking the Kool-Aid is, that's fine. And if you don't, that's okay too. So let me ask you this. In its least common denominator, what does a life insurance policy represent to the customer? In its least common denominator, what does a life insurance policy represent to the consumer? Anybody? What? Security? Peace of mind? Good answer. Anybody else? Nope. Nobody can think of anything else? Financial stability? All good answers. How about this? Cash. Period. Now, you could say that about any insurance policy. If you sell auto insurance and somebody's in a wreck, what do we provide them with? Cash to fix the car or to represent them in the lawsuit if they're at fault. You have a homeowner's policy and a hurricane comes through and it damages the house, like it did to Mr. Reinhardt's place in Florida when Michael went through. He's now living in Tallahassee instead of Panama City. What are we giving him to fix the house? Cash. If somebody becomes disabled and they have a disability policy and they need income and we provide them with their income that had been lost, what are we giving them? Cash. When someone dies and they have a life insurance policy and we give it to the heirs to pay for any variety of things, funeral costs, what do we give them? Cash. You know what I like to say? I'm still a licensed agent. I've got a life and health and property and casualty license in the state of Texas. I'm never giving them up. You know what I sell? Money. Would you like to buy some? Now think about that for a minute. What do we sell? Money. To fix problems. See, I kind of like to say that I'm in the industry, I'm a problem solver. And what I solve problems with is cash. And it's in the form of an insurance policy. And if any of these things happen, I'm going to provide cash. Now, the interesting thing about all those other analogies is, if it's an auto policy, I will provide cash, with a big word, if you have a claim. If it's a homeowner's policy, I will provide you cash if you have a claim. If it's a life insurance policy, I will provide cash. Can I say the word if? When you die. Because write this statistic down. Write it down. Mortality is 100%. There ain't none of us getting off this planet alive. So in the words of Don Henley, get over it. Now what we're going to talk about first thing this morning is some of the ways in which life, is it for you? Some of the ways in which cash from a life insurance policy might be used. The first thing we want to do for those exam takers, let me see hands again who's taking the exam. Let me get a quick count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, about 15. Write that number down, somebody. 15, we think, approximately. Let me get the right PowerPoint up here. I know Dr. Deb talked about the fact that we're being filmed. Oh my God. That means we need to be on our best behavior. This is going to be difficult. Those of you who are taking the exam want to know, what are the questions? Well, you're going to need to focus on the learning objectives. So let me get to a couple of those very quickly. Seems we have some background noise. Here's the nice part about the fact that this is being filmed. These boys back here can edit it. So they can take out all the bad stuff and all the stuff that I say that shouldn't be publicized. And that. So, let's get the general scheme of what we're going to do here. The life and annuity policies concept section provides participants, that would be you, with the core knowledge and tools necessary to deliver transformative information and counsel regarding life and annuity products to their clients and prospects. That's a mouthful. And you've already told me that most of you probably aren't going to do that on a regular basis. I will say again, are you consumers? Should you be taking some of this to heart? Quickly, if you'll look in your book on page, help me out. Oh, page 1, what a concept. I think we have bolded the words that you should focus on. We're going to talk about general uses of and the legal elements of a contract. We're going to talk about ways and how to determine how much life insurance, $, one needs. We're going to talk about different types of life insurance. We're going to basics of term insurance, whole life insurance, and universal life. We're going to talk about riders, provisions, beneficiary designations, settlement options, etc. In other words, specific items that are in a policy. If you have been through the other institutes, you know you had to read the policy, right? And the basic policy, any policy, starts with the insuring agreement. If this happens, we will. And the next one talks about what are we insuring. And it also talks about the perils. Now, this isn't like a homeowner's policy where the perils are fire, lightning, wind, hail, riot, civil commotion, vandalism, falling objects, freezing, all those perils. The best thing about life insurance, there's one peril. One. Oh, and by the way, in a homeowner's policy, if it's an I almost said all risk. If it's an open peril policy, everything's covered except what's excluded. And there's 12 pages of exclusions. Not in life insurance, there aren't any. There's some limitations, but there's generally no exclusions in life insurance because once you're dead, you're dead. What's to exclude? There's some limitations, but we'll talk about those. We're going to briefly talk about income tax aspects of life insurance. We are not here to make you tax consultants. But you as a consumer should know some of the tax issues in regards to life insurance. And we're going to talk about, in the area of annuities, we're going to talk about classifications, types, provisions, payout options of annuities. Aren't you excited yet? I got one yes. It's just you and me, partner. Yeah. We're a majority of 2. So, we're going to talk first about the first learning objective, but I just want to show you very quickly. In most of who's in the commercial business? Most of you. Personal lines? So a few more. What are the rest of you doing? That's a joke. I want to play a quick clip. let me just say the sale of life insurance is pretty much emotional. You have to if you're the consumer, you have to wrap your head around the first issue, your own mortality. Who in the world wants to talk about death? Nobody. Not you, not me, and not your customers. Right? Do you really want to talk about that? No. But should you think about it? Because it is inevitable. And what's going to happen to your family, to your business partner, to your business, to your kids when it happens? Any guarantees that it's not going to happen today? There's a 3-car accident on one of the freeways here this morning, and I'm told by the news that 2 people died. Happens every single day. So getting that emotional aspect tied into your brain is the first order of business, and coming to reality. And the words I like to use are, because it matters. Because I don't want to leave my family, my spouse, my children with a bunch of bills that I expected to pay while I was still on the planet. Because I'm just short of 7-0. I'm getting close to the end, as many of us are. Let's see if this is going to work, boys and girls.
Though the times may change, the desire to protect your family through life insurance products remains.
What happens if she doesn't come home from work tonight? How many kids were in the picture? How many? Did you notice? 3. 3 girls. They were trying like hell to get a boy, and they still haven't. And this is one of our employees. And I asked her, so you're still going to try for one of the boys? And she says, no, I'm done. We'll see. It's an emotional issue, and it's an emotional sale. And I will tell you from personal experience, I, as a life producer, thank you, Jesus. I made it an emotional sale. I had no problem looking at my customers because I was a multi-line producer. When I started out in the business in 1972 in Anaheim, California, my mantra was auto, homeowners, life, auto, homeowners, life, auto, homeowners, life, auto, homeowners, life. That's what I did. And I had no problem looking at somebody and saying, you know, when you talked to me, when you said you wanted me to talk about auto insurance with you, I want to ask you a question. Would you like to consider hiring me as your insurance agent and your insurance consultant? If that's okay, I would like to, if you want to hire me, that's good. I'm going to talk to you about all sorts of problems and all sorts of aspects of your life. You may not want to hear it, but I'm going to say the words to you. You decide. And I would automatically transition to their homeowner's insurance or their renter's insurance if they were renting, and life insurance. And I had no problem looking at husband and wife right in the face. I mean, I was a young producer. Most of my customers were young couples. You're both working? Yes. No kids? No. What's going to happen if she doesn't come home from work tomorrow? Well, the customary response from a male, because we're stupid, is, well, that's not going to happen. What do you know that I don't know? What's going to happen to you if he doesn't come home from work? Who's going to pay the house payment? Who's going to pay the car payment? Who's going to pay the credit cards? Who's going to pay? Who's going to pay? Who's going to pay? Those are all the kinds of things. So, you with me so far? Anybody drinking the Kool-Aid yet? Let's talk about the general uses of life insurance. The general uses of life insurance is a long list on pages 2 and 3. And I'm going to just elaborate a little bit on each one. You stop me if there's a question. Number 1 is protect your clients, or better yet, protect your business. Build a wall around them. Because if you don't talk to them about this and some other agent does, have you just set yourself up for them to steal your business? Yes. That's what you don't want, because what we want is consistency. We want to keep the business. We call it persistency in life insurance. So build a wall around them. Number 2, create an estate. You know what your estate consists of? Everything you own or have any incidents of ownership in. You're 50-50 partners with your spouse or with your children. Well, 50% of that is in your estate. And when you die, that's all calculated in your estate. Now, there's some discussion about estate taxes. We're not going to drill down into that here. That's a little bit too deep. And with the most recent tax law, the amount of money that is required to pay estate taxes is sufficiently high enough that most people don't have an estate tax problem. Did you know that when you die, the government wants money? When you're alive, the government wants money, but they want all of it. You know, it's got the IRS. You know, have you seen the word there? THEIRS, the word theirs? Well, in the middle of that is IRS, because they think that your money is theirs. I'm getting some smiles and some frowns because you're as ticked off as I am. For any of you who had to send in your quarterly return, your quarterly deposit as of day before yesterday, like many of us had to drop it in the mail with gritting my teeth. Yeah, right? Pay estate taxes. I just mentioned that. Most people don't have a problem. Fund a business transfer. We're going to elaborate on that this afternoon, so I'll defer that until later. Here's the one that I always loved as a producer, and brand new producer in Anaheim, California. Pay off the house. Pay off the home mortgage. What's going to happen if something happens to you on the way home from work and you don't make it home? Who's going to pay the house payment? Because most of us who have 2 incomes, 2 spouses, husband and wife, rely on the other person for income to pay the bills, don't we? I'll elaborate more about that later from a personal perspective. By the way, we tell personal stories. I do, Jerry does, Bob does. All the other faculty tell personal stories, whether it's in personal lines, commercial, life, and health. Why? Because we've lived it. And generally speaking, you can't make this stuff up. How about provide an education fund or a college fund for children or grandchildren? My question to my customer is, question I asked myself, did my parents provide the cash for me to go to college? Yes. In my case, my father provided the cash for me to go to college. Thank goodness for him. Sidebar. I was able to get summarily dismissed after a year and a half of college for a significantly lower grade point average than the school required. So I got the letter, and my dad got the copy, and I got the phone call, and I got the 3 words I will never forget. Here's the deal. There was some logistics involved, but the upshot was, you're coming out here to live with us in Orange County, California, and we're going to get you into college. Or you can go back to your mother, my parents were divorced, or you can go back to your mother in Indianapolis, Indiana, and become a gas station attendant. Let's see. I like option A, thank you very much. So I went out there, got enrolled in college, and I was able to cram 4 years of college into 6 years. Much to his chagrin. But he continued to pay the bill. Thank you. What's that? I hope so. He was in the insurance business too. You see, it's hereditary. He was a vice president for these guys. Allstate. Had a 36-year career with them and did quite well. So hopefully I'm carrying on the story. Protect the business from loss of a key person. That's another business aspect that we're going to talk about this afternoon, so I'm going to defer that until later. Create a supplement of a retirement fund. Life insurance, permanent life insurance that creates cash value is a good thing. Because cash value, which we're going to elaborate on, is your money. And I'll show you a few ways in which a life insurance policy can serve two purposes: death cash or cash if you live to supplement your retirement. Comply with a court order. Husband and wife get a divorce. 2 children, young children under the age of 18. The court order says one of the other spouses is responsible for paying alimony, child support, maintenance, whatever you want to call it, until these children are age 18. Is there any guarantee that the payor is going to live that long? So many judges will issue a court order that says you are responsible for paying money for these children for alimony, child support, etc., until age 18. So we're going to, in order to comply with this court order, have to buy a life insurance policy in an amount that is the equivalent of that dollar amount until these children are age 18. And you need to name your ex-spouse as the beneficiary, which really doesn't go well. Trust me, I know. Yes, you can. Did you hear the comment? You can't make him pay it either. Well, you can't make him pay it, but you can force him or her to make the ex-spouse an irrevocable beneficiary, meaning he or she can't change it. And if they don't pay the premium, they're in what? Contempt of court. It's a pain. But anyway, comply with a court order is a reason. Make a gift. Some people who don't have family members that they want to leave money to will designate a charity that they want to leave money to. The Humane Society, food bank, their local church. What's her name? Hemsley in New York left it to her dog. That proves one thing to me. The words of comedian Ron White are correct. You cannot fix stupid. Reward and retain valuable employees. That's another business technical term that we're going to talk about this afternoon, just briefly. So there's 3 of those up here so far that we're going to defer until later. Equalize inheritances. Quick story that will hopefully resonate. When I was in Colorado, I've already mentioned California. I grew up in Indiana. I went to college in California. You heard that story. I went to the insurance business in California in 1972. In 1990, I got transferred with MetLife to Colorado, and I stayed in Colorado for 18 years. I left MetLife and went to work for another company. I was in the farm and ranch and the ag business in Colorado for 17 years. Great business. I was still in the life insurance business, but my focus from property and casualty perspective was farm and ranch. I had 18 dairies insured, big dairies. One of the dairies was family owned. Mom and Dad had started the dairy 40 years ago, and they wanted the kids to take it over. And there was 2 sons and a daughter. One of the sons took over the managing of the dairy. One of the sons announced, I'm not interested, I'm out of here. He moved somewhere, I forget. And the daughter took over the bookkeeping and the accounting records for the business. So now we've got 3 children, 2 of them are involved in the business. And the parents want to leave the assets that they have accumulated and the dairy to all 3 of them, don't they? They don't want to excommunicate the one who left the business. So one of the things that we suggested was how much, when you, mom and dad, die and you leave the dairy to the 2 kids who are working there, how much money would you like to leave to the third son, the third child, the other son, to offset what you're leaving to the other 2? And we came up with a number and wrote a life insurance policy. Now, there's usually a comment like, you know what, I'd rather have the cash than working in the dairy. But the dairy was a very profitable organization, which could be sold for a significant amount of money, and if they played it right, it would be worth more. So that's a long story. That's a short story for the issue. Cash value is an emergency fund. We're going to talk a little bit more about cash value life insurance and what you can do with it. See, to me, this is the operative one right here. This is the most important one. Replace lost income. Husband and wife who both work depend on each other for their income to pay the bills, don't you? We did. And if something happened to my wife and didn't come home from work that night, her income immediately stopped. How am I going to pay this? How am I going to pay the bills? I'm going to elaborate on that a little bit later with another story. And the other one is most important, is final expenses. I'm sure that some of you are painfully familiar of what it costs to bury somebody. Do you think most consumers know what it costs? Probably not. I'll tell you what I did when I was in the actively producing. This was in Colorado. I went to downtown Denver and I went to the Ollinger Mortuary. Big mortuary company in Denver. And I got a price list. And I carried it around with me when I would go to talk to people about their insurance. You want to hire me to be your insurance consultant? I'm going to talk to you about all sorts of things that you probably don't want to hear, but I'm going to bring them up. Why? Because I need to get off the hook. I need to verify that you and I had this conversation so that if it ever happens that there's a question about whether or not we talked about this because you didn't do something that I suggested for your valid reasons, I'm off the hook. Now, does that concept make sense to you? I need to get off the hook. So I would carry around that Ollinger Mortuary price list, and when we came up with this subject, I'd just plop it down in front of them. I would say, well, here's a price list. Would you like the Volkswagen, the Chevy, or the Cadillac, or the Mercedes-Benz? And of course, guys, as stupid as we are, will make some comment like, oh, you can just put me in a cardboard box and bury me in the backyard. Sorry, we can't do that. Because the mortician's lobby in every state requires a certain amount of safety with remains. Now, in today's world, what do most people choose? Many people choose? I do. What? Cremation. I'm done with it. I've used it up. I've abused it enough. Turn, burn, earn. And I have left specific instructions with my wife and my daughter. Here's what you're to do. You're to buy whatever urn you feel compelled to buy. I don't care because I'm dead. And you can put those ashes in the urn and do with it as you see fit. Because I don't care, I'm dead. However, I have one request, and it is unequivocal. You are to take a few of those ashes and put them in some sort of a container. You pick. My wife says, she says, yeah, I'll just put them in a Ziploc. You pick. And you're to take them to Mazatlan, Mexico, where we have vacationed every year for the past 20 years, and I have a standing tea time at El Cid Country Club. And you are to take those ashes to Sergio, the starter, and my caddy, Lee. You think I've thought this through? And you're to take them early in the morning, before the first tee off, and sprinkle those ashes on the first tee. That way, I will always be the first one on the tee box every morning. And pardon the expression, I'm dead serious. I don't care. I suspect that Sergio and Lee will be able to handle it. It's called nice tips.
Well, you're dead, so who knows?
And I'm dead, I don't care. Now, do you think I've thought this through? Anybody drinking the Kool-Aid? Anybody thinking this through? Anybody having an OMG moment? With all due respect, I hope you are. Are we having fun yet? Good. Because this is serious business, but if we can't have a little bit of levity and a little bit of fun, this is going to be 2 days of absolute hell. So we're going to have a little bit of, and by the way, I have a very irreverent sense of humor, so don't be offended. It'll be clean, but it'll be clearly irreverent. First, technical. By the way, the previous information, all the uses of life insurance, that's a pretty important list. It's a pretty important list. And I'm sure you can find a few of those that might apply to you. The next issue on page 4 is the legal elements of a life insurance contract. Because a life insurance contract is a legal document that has rules. Most of our property and casualty business doesn't have the highly technical oversight that life insurance does. We have the agreement phase. The agreement phase of a life insurance contract has 3 aspects: offer, acceptance, consideration. The offer phase is the insured applicant, the prospective insured applicant, fills out an application. Gee, imagine that. and answers a multitude of questions, oftentimes including health questions. Have you ever had, if anybody's filled out a life insurance application, you know of what I speak. There's a whole busload of questions. Have you ever had? And they go through a litany of diseases and conditions that you need to answer yes or no. And if you lie, that's not good. Perhaps I should say fib. Lie just has such a terrible connotation. You fib a little bit. Well, huh? At least for 2 years, yeah. Well, most of the questions on applications these days say, have you ever? So the offer, I fill out an application and it goes into where? No, where's it? It goes into the home office to what department? Underwriting. My favorite description of underwriting is the sales prevention department. It's a joke. That's my first irreverent comment. Now, if there's any underwriters in here, don't take it seriously. It's a joke. But from a sales guy, would you expect me to comment like that? You're an underwriter, aren't you? You're a sales, okay. Where are our actual underwriters? Okay. Are you offended? No. I hope not. It's a joke. Because I know this is a team sport. And you and I, as the salesperson and the underwriter, need to work together to make this happen. But I still like to use the phrase. And the application goes through the underwriting phase, and then there is an offer. The offer doesn't happen until the company sends back an offer to the insured to say, here's our offer to insure you. And the next aspect of it is consideration. What is consideration? The premium. Because in life insurance, nothing happens until money changes hands. Which brings me to the word binder. We're all familiar with binders, aren't we? Binding authority. If you have if you're a commercial producer, you're a commercial producer? And you have binding authority with two companies, and one of your customers calls, and you've got their business insured, you've got their building insured, you've got their equipment insured, you've got their business auto insured, and they call you on Friday afternoon at 3:30 and say, oh, of course this never happens, I bought a building and I forgot to call you, and we're closing on the building at 4:30, it's now 3:30. And I need coverage on the building that I'm buying that I'm closing on in an hour. That never happens, does it? Huh? Yes, it does happen. And if you have binding authority with the company that they have their current business with, can you say to them 2 words? You're covered. And are they? Because if it burns down to, have you had an application? Do you have money? Do you have any information other than I'm buying the building? And you say they're covered and it burns down tomorrow, guess what? You're covered. There's no such thing as binding authority in life insurance. It does not exist. There is the possibility of temporary coverage during the underwriting process in life insurance, but it's a little more complicated than we're going to get to right this second. There is temporary coverage, but only if 2 things happen. You fill out an application, the application is correct, and you do what? You take money. Because if you don't take money with the life insurance application, nothing's happened. So if they die in an auto accident 2 days after you fill out the application, If you don't take money, there's no way it's going to be paid. If you do take money, there's a possibility the claim's going to be paid. And I'm going to elaborate on that when we get to some other issues like the conditional receipt, etc. But do you see the big difference in property and casualty versus life insurance? If you don't take money, nothing's happened. The next issue in legal elements is competent parties. That's a relative term. I'm sure some of you would say, well, I've got some insureds who I'm not sure are really competent. But there's legal issues. They must have legal capacity. They have to be of sound mind and body and all those other really difficult terms to define. And there's things like anyone under the influence, anyone considered mentally incompetent, or minors are considered not competent to engage in a life insurance contract. Now, this is one of my favorites right here. We're going to talk about this also a little bit later. Life insurance on children. We were just talking, 6 grandchildren, 8 grandchildren, all of which she put the foresight to buy life insurance on every single one of them. You're to be commended. They will thank you for it. I am a huge... Some grandchildren you want to say... My grandmother used to say, I'm a grandchild of my grandmother, if you don't straighten up, I'm going to kill you. I used to say that to my son. If you don't straighten up and fly right, you know that phrase, I'm going to kill you because I can make more. I'm a huge believer in life insurance on children. Now, is that a tough subject to talk to parents about? Because all they can think about is their child dying and them getting money. No, that's not what it's about. It's not what it's about. It's about ensuring their future insurability. They're never going to be any younger, and they're never going to be any healthier. And you can guarantee them life insurance availability for the rest of their lives if you'll follow my lead, and I'll show you later. And lastly, the legal elements are a legal purpose. The insurance cannot be issued for an illegal or immoral purpose. Several years ago, there were a couple of life insurance agents in Manhattan, New York City, who were writing life insurance on indigents, homeless people, writing the policy on them, naming what the insurance company thought was a legal beneficiary, and then changing it to them, the agents, and then having them killed. They didn't get away with it very long. There's some sick people in this planet, aren't there? Here's the big deal. There must be insurable interest. When? Time of the application. When must there be insurable interest in property and casualty? Say it again, John. At the time of the loss. Insurable interest has to exist at the time of the loss. In life insurance, insurable interest has to exist only at the time the policy is issued. Here's the question I frequently get. Husband and wife get a divorce. Husband is owner of his policy. Wife is the owner of her policy. They get a divorce. Are they obliged to change the beneficiary, or is there any legal reason that they have to change the beneficiary? No. And they can continue to have that policy for as long as they want to pay the premium. Okay, here's irreverent comment number 2. Get ready for it. So, Ellen, you've been divorced for 3 years now. Yes, I have. Well, whatever happened to your ex-husband, Bob? Oh, he died. When? Next Tuesday. Is there any obligation for anybody to change a beneficiary after that fact? No. Remember, insurable interest only has to exist at the time the policy is issued. And the owner of the policy can change it to anything they want. I want to talk about ownership a little bit later. Yes, ma'am.
What is the insurable interest? I mean, obviously, if I want to buy insurance on myself, I have an insurable interest on myself.
Good
But
question.
If I can name my cat or the SPCA as a beneficiary, right?
You can.
So how is insurable interest determined? Is the person that's buying the insurance?
It's going to be the owner of the policy. And if I buy a life insurance, I have an insurable interest on myself, clearly. And I can name anybody I want. I could name my next door neighbor. Now, the insurance company might say, wait a minute. What's the insurable interest of your next door neighbor? So they might not issue it. They might say, no, we're not going to do that. But insurable interest exists between spouses. Insurable interest exists clearly between parents and children, grandchildren, business partners, key person.
But the person, if they're not a minor, the person would have to agree to allow someone else to insure their life.
Minor is a different issue. Minor is a little bit different issue, but
Can your husband buy an insurance policy on you that you don't know about?
no. Question is, can somebody buy a life insurance policy on someone that they don't know about? And the answer to that is no. Why? Because the person being insured has to fill out the application and fill out the questions and answer all the medical questions. So you can't buy life insurance on somebody that you don't know. But at the time of the application, you and or the underwriting department, the insurance company, are going to determine if there's insurable interest or not. And it's more common sense than anything. Do you have an insurable interest in your neighbor or some unknown person down the street? No, you don't. That's not going to be issued. But there's clearly an insurable interest between family members, spouses, children, business partners, other business arrangements. Yes. You're not buying this quite yet.
I'm still a little confused. So I guess I'm getting confused between like underwriting and insurable interest. So you're saying that you can buy an insurance policy that belongs to you
Yes.
on someone else's life.
If they agree to it. And there's a reason for it.
And they can't change the beneficiary, only you can because
I'm the owner. I'm the owner. But if you want to buy a life insurance policy on Reuben, you're going to have to come up with an insurable interest between you two in order to buy the policy. And clearly, and he has to agree to it. And clearly there isn't any. So it's not going to happen. It's not going to happen. Or anybody else in the room. Now, if you have a business partner, there's a reason. You have children, there's a reason. On your parents, you have a reason. On your children, your grandchildren, you have a reason. But your next door neighbor, the person sitting behind you, me, there's no insurable interest. Because there's no financial problem between you and I that's going to, all it is to make money. Just like my indigent folks back in New York City. The way they got around it was they named somebody who appeared to be a family member, and they were the owner of the policy, and then they forced the owner, the indigent person, to change it to them. It was all very nefarious. And it didn't last long because the insurance company found out. And by the way, those two yahoos are in jail. We good? Okay. All right. Guess what? We are at our first break. How long? 10 minutes.